What's going on, guys? It's Matt Fractal back with another video. I hope everyone's been doing good. As you know, we get straight into the videos. So this first page that I have up, you guys can find it on your own platforms, global-rates.com. This website basically just shows you where the interest rates are at. It's a pretty clean and easy view for whatever central bank you're looking for. So I mainly look at the dollar index as a benchmark chart or benchmark asset to give me more insights on other foreign currencies or different asset classes. So if I'm looking at the American Central Bank, which is the Federal Reserve for the United States, I can see back in December 2024, we had a markdown on the rates from 4.75% to a 4.50. This just means to me that over the last quarter, so the first quarter of 2025, since this rate was changed in December of last year, that we will have some bearish pricing on the dollar index, only because just from a clear value standpoint, the interest is lower than it was previously. We went down a quarter basis points from 4.75 to 4.50. So that shows me that, of course, compared to other asset classes, the dollar is still valuable, but based off the interest rates dropping down a quarter basis points, it's showing you that the dollar index is not as interesting to hold on a bullish run for other investors. So when we see rates go down, most of the time the asset itself goes down, and I'll show you guys in the charts. But one thing I did want to make note of is that about 10 days ago for the euro, we actually went down 25 basis points as well, from 2.65% to 2.40, right? This is going to be interesting because the euro has been rallying against the dollar for the last, I would say, 4 months. But now with this change 10 days ago, and when I show you guys the seasonal tendencies for the dollar index, you'll start putting your intermarket analysis together to see we might have a low in the dollar index, but that's just something I want to say. So just make sure you guys remember that 10 days ago, the Europe Central Bank dropped basis points 25%, 0.25%, so 25%, 25 basis points. That's what they call it. But it's just a 25%, a quarter percent we drop. So that might take interest out of buying the euro and put more interest in buying the dollar index. Okay, so that was just my rant on rates. So going into Forex Factory for next week. Next week is NFP for the dollar, non-farm payroll. So this week it could be either an explosion week where price is actually predictable, but as you know, if you've been trading for a while, NFP weeks can be either small consolidated weeks, they can be range bound weeks. So we'll have to get into the charts to actually make a prediction. But NFP week, we have a lot of news this week. Just pretty simple. Going to seasonal tendencies, right? So right here is a seasonal tendency chart. If you guys aren't familiar with this chart, shout out to ICT. He's the one that, made this. I'm not going to say he made this chart, but he made it more popular going into 2020. So looking at the seasonal tendencies, starting from January, we usually have a rally up. Then around the March period, we have a rally down. We're in April 27th to be exact. So we're looking around the end of this the square rectangular box right here, price is going down. And if you're going to see in the charts, the dollar index was on a bearish run, but May is coming up in a few days, and notice what we have here. We have a nice V shape in the beginning of May, meaning a bullish turn or bullish correction on the dollar index, right? And since we're in the 4th month of the year, every quarter consists of 3 months. And if you guys are familiar with ICT's work, he likes to talk about the quarterly shifts. So every 3 months, there's usually a shift in market pricing or a shift in market sentiment. Yes, we are in the 4th month, but sometimes the market, it delays price action. But going on a basis of every 3 to 4 months, price looks to change direction on a higher time frame. So May is going to be the 5th month of the year. So we wrapped up with the first quarter, the first 3 months, January, February, March. We had, according to this chart, we're supposed to have bullish pricing, but obviously price comes first. This is just for modeling our trade setups on a seasonal basis. That's why it's called a seasonal tendency. This usually happens. It doesn't always happen. It usually happens. So looking at the chart, if I see a V formation reversal pattern in May, or in the beginning of May, end of April, and I'm currently in that time, as it being the 27th of April, I will be looking to shift my seasonal tendency and my quarterly bias leaning more towards the bullish bias, because this is a big run for the dollar starting the beginning of May, end of April. So just looking into the seasonal tendencies, what can we see for the next 3 months, April, May, June? We're looking more for a bullish bias on the dollar index. All right, pretty simple. Now going into the chart, we have a dollar index chart right here. We're on a 3-month time frame. The reason why I started using the 3-month time frame is because you can get a full visual on one candle, but with 3 months of price action, right? So as I said, usually for the first quarter of the year for a dollar, we usually see a rally in price. But as you can see, we opened January 2nd, we traded up into this last up close candle, and we closed on the downside. So it was a bearish quarter for dollar, not really matching up with the seasonal tendencies, but we traded up into a premium price. That's why the dollar index went bearish, right? And as you can see, going into April, like March, April, that's when price actually started going down with more aggression. Take out this up close candle here, taking it out. So we had January to April, bearish month, and then we started April here, and we traded down. Now with that seasonal tendency, with May making a V formation, let's get rid of everything that's on this chart. May making that V formation, the reversal, I need to use my PD arrays on a higher time frame to match that seasonal tendency. And if I can't match it, then I would just have to continue with this bullish, this bearish pricing that the dollar index is showing. However, I noticed that we run below this swing low here and this swing low here. More importantly, we ran into a imbalance, right? We ran down into an imbalance. What kind of imbalance? This is a buy-side imbalance. The reason why it's a buy-side imbalance is because we're only having buy-side through these candles right here. So this candle go up, the low of this one is here, the high of this one is here. We only have buy-side in here. So on the downside, we're filling it in with sell side. All right, so buy side inefficiency, buy side, it's a buy side gap, it's a sell side inefficiency, sorry. So price just traded down into a buy side and a buy side gap. what does that mean for price? Well, as you can see already, price has been retracing just a little bit off of this level, but having one level doesn't really mean anything. We would have to create a range to understand where the algorithm will be repricing to. So starting from a 3-month, I will go down to a monthly. Right? On the monthly time frame, as you can see, starting from January, we had that bearish run down below these old lows into a buy side gap. If I refine this gap here, it makes it more refined. We have that monthly gap here, monthly buy side gap, filling it back down with the sell side bearish candle. So with this here, I can show you guys on the upside too. So we had this sell side gap up here, right? So only sell side was delivered in this gap. And then as you can see, price traded up one more time and then fully closed in the range with buy side. So sell side gap, we're looking for buy side to fill it in. If we have a buy side gap, we're looking for sell side to fill it in, which it's doing right now on the April candle. So April started here, we opened, we traded up just a little bit, but for the full month, we were bearish. Traded down here. Now we're looking at potential reversal. Using this with the seasonal tendencies, knowing that the beginning of May, end of April usually sets a V formation to reverse back higher. So let's go down into the weekly time frame for next week. So as you can see, price came from that sell side gap. We traded lower, filled in more gaps, and we traded down into that discount pricing, which was the buy side gap. If I'm using this as a reversal point, right, I would want to look back into the price action and see, did we sweep any liquidity? As I mentioned on the higher time frames, we did. We had this old low, we had this old low. So using this as a sell side liquidity pool, all right? So price traded below a sell side liquidity pool into a higher time frame monthly gap, as well as we did have this swing low here as well formed in April, and then we just took it last week and closed on the upside for the weekly candle. So above this price at 99.587, this is where we start our analysis for next week. Of course, we just put on the higher time frame PD arrays, but that's just giving us a directional bias for months and weeks to come. But predicting the next week's candle, which is going to be very beneficial for day traders and swing traders, but knowing what direction the weekly candle is going to go into, either going down or up, if you can just figure that out before price starts trading on Sunday, you already did a lot of the heavy lifting for your analysis coming up during the week. So how do we do this? We look above the current price, 99.587. Above that, right? If we're bullish, we're looking for the bearish PD arrays where we can actually fill into. So this made the low in April. Where can price trade up into, right? Well, I see a fair value gap here. Right, fair value gap on a dollar index. So price can open and trade up into this as a draw on liquidity. As well, it can trade up use this as a high of the week or a bearish PD array to continue trading lower to fill in this monthly gap completely, or just completely continue going down bearish, right? Above that, we have this order block here, which also lines up with this fair value gap here. I'm going to just use the order block, the opening price. And then in the range, we have this old high. So we have about 3 PD arrays on the upside where we can see price go into. These 2 PD arrays are pretty high or pretty far away from price. So we're not going to necessarily look at these specific PD arrays for the next week's candle. However, next week is NFP and we don't know if price is going to make a bigger candle like this, or we're going to make some small candles like this for a range bound week. So let's go into the daily time frame. What do we see on a daily? Right, even on a daily time frame, we swept liquidity here. Right. So we swept liquidity into that monthly time frame. And then we had Tuesday trade above this down close candle, which makes this down close candle a bullish order block. Let's start using our colors now since we're in a daily time frame. Okay, so we have a bullish order block here. As you can see, price traded down. We tagged it, and price started to trade away from it, right? But what I also can see is this order block has quadrants. So we have the 50%, which I always usually mark out, which is like the mean threshold. We're looking for price not to close below this if we are bullish, right? So we have this price here. So for next week, what I'll be looking for is an open. If we are bullish on price, we want to open, trade lower, giving us that Judas swing, getting, beginner traders off side. So when we open, we want to see a sell-off, making other traders think, okay, dollar's still bearish. Pick up a discounted price on this order block. And then we already did our due diligence on the weekly time frame to see where price can actually draw into, right? Which is the weekly fair value gap, the weekly order block level, and then the old high. But with these weekly levels on there, we can also refine it on a daily time frame. So I see a volume imbalance inside of this gap on the weekly. So I'm going to use that as well for a more precise price point, right? So if we open trade down into this last down close candle, even though we did pick up a discount here, I don't like how price was trading into this swing high here and rejected. So if we traded up and we were bullish on Friday, I would have liked to see a run above Wednesday's high. We didn't get that, right? So I'm going to look for an open, a trade lower into order block. And then our first potential high that we can potentially make would be this old high, which was the low of the weekly fair value gap. Then on a daily standpoint, we have this volume imbalance. And then on the high end, we have the high of the weekly fair value gap, which we could potentially run into as well. So, yep, that's what I'm looking at on the dollar index. I'm looking for bullish pricing due to the fact that foreign currency dropped interest rates, especially on the euro. Seasonal tendency, we're supposed to be bullish starting at the beginning of May, end of April, which we're getting into now, as well as we ran old lows. So we ran out sell side liquidity. So the algorithm knows that and might potentially be looking now to run out buy side liquidity. The people that are putting orders above old highs, all right? So this is how my chart, and if I do want to refine my PD raise going above this order block on the weekly time frame, it's lining up with this volume imbalance right here. So I would grab the range and put a volume imbalance right there. Something like this. So we have a volume imbalance. Yes, we traded into the middle of it, but we still have, there's more gap in between from here to here. Right? No real volume, just the wicks. There's no volume in here. And then we have our old high all the way back in the range, which I'll just create. All right. So this is how we're looking. If we do rally from here, then I'll be looking to pick up orders on this order block on Thursday. But as I said, since we didn't run above that Wednesday swing high, we might potentially open, trade lower, Judas swing, get wrong traders on the wrong side, onto selling side, pick up a discount, and then look to rally above this old high and into the weekly fair value gap. And then if we get more precision inside of the daily volume imbalance. So that's the video for you guys. That's just a quick overview on the dollar index and what I personally expect the dollar index to do in these upcoming months. If you guys got any value from this, let me know in the comment section. Make sure to subscribe. And if you guys want a more closer niche group, you guys can join the Time Precision Effects Telegram channel, where we basically talk about trading all day. And we also put out levels, like where do we think price is going. We talk about the news. We have quarterly resets, and we also share live trades. So hopefully you guys enjoyed, and yeah, see you later.